Hey, Dan Passarelli here. You know what my favorite thing about being an option trader is? It doesn't matter if the market goes up or down, you can still make money. And in fact, I have noticed that option traders can make a lot more money when the markets are heading lower, especially when people are panicking. Why? Well, a couple of reasons. One is because you can sell some really, really rich option premium, especially some positive delta trades like put credit spreads and put spreads. And that, of course, is when everybody says selling puts and put spreads. Are you crazy? But here's the thing. The stock market's not going to go down forever. Just like before I said it's not going to go up forever, I'm saying now it's not going to go down forever. Now, could there still be room to the downside? Absolutely is the decisive answer to that. We don't really have good, solid support until about $500 in the SPY, but that's basically one more day like today. So, for long-term investments, that's a great opportunity to start scaling back into things which you could take heat on in the short term, but does the short term matter for long-term investments? Not at all. Seize opportunity when it's there. Now, the next thing is short-term trading. And, well, there's a couple of things here to talk about. First, let's talk about reasons what's going on. Of course, people were a little freaked out, if you will, by the low employment figures that came out on Friday's monthly unemployment. So freaked out, in fact, that we could be heading for a recession that prior to that, we had about an 85% chance as extrapolated from the Fed funds interest rate contract, there's an 85% chance of the Fed cutting interest rates 25 basis points in the next meeting. Now there's over an 85% chance of the Fed cutting by 50 basis points in the next meeting. So it is expected to be more imminent and much, much, much more likely. Now, by the way, we've kind of got to set ourselves up for that whole anything can happen thing that I love to talk about so much, so-called black swan events. And one thing, and I'm not saying necessarily that this is something I believe is imminent right now, but if the market does sell off a lot harder, and we get worse data on the economy, set inflation aside, but the economy itself, especially if inflation is taming even more, that the Fed doesn't necessarily have to wait until the next FOMC meeting. The Fed can cut rates anytime they want.